Can we start? So last week we discussed how did you do this? How many questions were there? Okay. Wow. Right. So last week we discussed many areas of consolidation. I checked two things from this assignment. How you can prioritize things? Is this kind of a in your priority list? What's the priority we have given for degree and corporate reporting and for consolidation? I wanted to check that first, and second, I want to take that. So you need to have kind of experience to do calculation of 5 questions, right? In one book. So that's the practice. Talk about knowledge. Still, I'm giving the knowledge. I wanted to check through two things: professionalism and working. Right? Professionalism, zero make at least. So then they can't prioritize the people we had. So today we have double AB exams. I accepted. I got that admission and I accepted. These 3 people, then they are not professional. They don't have prioritization of their life. So then that's too much impactful for their personal life. These are acceptable delays. Anyone can go, right? After giving this. There are delays that can accept it. That's all right. Here we have 3. That's all right. So people who did all the questions, you are getting full marks. Don't think about balancing the the balance sheet. It's not required because we are still working on this. I will share that today. I will share all the answers with Excel format. You can go through that. You can understand what are the double entries. Very easy. I have given. And every question I have prepared the answers in the Excel format. You can with the links, right? You can go here and there and study. If you have further questions, you can raise it up. Right? All the things I have discussed here. Today I am focusing further about these adjustments. We'll start from one easy one, right? We have this consultation piece. Point number 6. At the acquisition of Q, P has incurred about a legal advisory cost of 0.5 million. 0.5 million means 500,000 advisory cost at the point of acquisition. Parent company acquired subsidiary company. At the point of acquisition, parent incurred the cost of 500,000. How we are going to count it? So then, very easy. Cash and cash credit. Debit to asset. Debit to. Doubt is debit whether we are going to debit it to goodwill, cost of control account, because it's a cost of acquisition. People thinking that we need to debit it to the cost of control account. Debiting cost of control account means debiting the goodwill. So incurring the legal cost, we are going to debit it to the goodwill. Is that correct? So right, some part of goodwill. Goodwill is the concept, the asset. We are having to attract more customers, to have kind of a more market. So then, if we are incurring the legal cost, is that impact to the goodwill? No. It's some cost. So then, cash credit, debit to consolidated. Cash credit, debit to consolidated earnings. Keep in mind, ඒක නිකන් දෙන්නේ console එකේ උගලක් වගේ. At the acquisition point, they have done a kind of a legal cost. What type of legal cost? Maybe legal related due diligence, right? Legal due diligence. අපි ඔඩිට් කියන සබ්ජෙක්ට් එකක් කරන්නේ. Immediate කතා due diligence. Other related services. Due diligence, we can have many due diligence. IT, maybe payroll related, legal due diligence, overall due diligence. Due diligence can be a kind of a review engagement or exit upon proceed. I hope you are comfortable with that. So then once you are doing kind of a due diligence for acquisition, check whether whatever acquired company has legally okay legally or whatever the ID side, we have to do kind of a due diligence. So to do that activity, we need to enter cost as a bearer. That was how we are going to count cash credit, cash credit, debit to bearers, expense account. Bearers expense account is consolidated. Not to the cost of control account. Keep in mind, not put it in the cost of control account. If you are putting the cost of control account, it will accumulate to the goodwill. It's not part of the goodwill. Keep in mind, the incurred cost at the acquisition is not part of the goodwill. Because of that, we are not putting into the cost of control account, right? So that's the area can be tested in the exam. एक अनिवार्य पेपर के लिए. Whatever the cost you are incurring. Okay. What is? That is 7 contingent liability. Contingent liability. That's also a area the examiners wanted to take as the example. Point number 7. That's about contingent liability. Normally contingent liability what's the accounting treatment? What's the standard? It is 37. Contingent liability. What you are going to do to contingent liability? What do you think? Contingent liability? Roman contingent liability Contingent asset, contingent liabilities. That's the basic knowledge maybe. And now we got complete to the formula. One of these are contingent liabilities.
Disclose करना sir.
So then contingent liability, we have to disclose, right? We don't need to do provision because there's uncertainty. Uncertainty. So then in accounting we are discussing about three status: remote, probable, possible. Remote, we are not going to do any adjustment, any disclosure, right? We are not going to do anything. Probable, we are going to make a provision. Possible, if there's a possibility, there's uncertainty here. If it is so, this is a disclosure. Only a disclosure. So then, contingent liability or contingent asset is a possible cash outflow or cash inflow to the organization. It depends on a future event. Maybe a legal case. If it is a legal case, it depends on the court order. So that with that dependency, we are not going to make it as a provision in the books. We are not passing double entries. If it is so, it's just a disclosure, right? So then, at the point of acquisition, B company acquired us R company. R company may have contingent liabilities. Contingent liabilities in the disclosure, not in the books. May accounting treatment as at the acquisition date, the subsidiary company have not recorded their contingent liability in the books. They have not passed any double entries, right? They have not passed any double entries. මොකද කියන්නේ acquire කරන තැනදී we have to record it. I mean site එකේ යන්න පුළුවන්. We can go. Right. Mama given on behalf of friends, you can't submit here. Then they have not submitted, they have keep it here. Good. Very good. So right, we are discussing at the point of acquisition. You need to concentrate very clearly, right? This will be tested definitely in the exam, contingent liability. At the point of acquisition, what we have to do is we need to evaluate whether is there any contingent liability. That contingent liability should be evaluated and need to be recorded once you are calculating subsidiary goodwill. Right? Should be recorded. How are you going to record it? Contingent liability account credit, cost of control account debit. Cost of control account debit. Cost of control account debit means it will reduce your goodwill. That's the logic behind it. That's a contradiction, right? At the point of individual company, standard clearly says that if it is possible, don't record it. But at the point of acquisition, standard clearly says that you have to consider your contingent liability. That's a contradiction. Why? What's the reason? At the point of acquisition, we are calculating invisible goodwill, right? If you are recognizing such kind of thing, at At that time, we need to evaluate that whether we have any contingency. So then that will impact to that goodwill, right? If we are not considering this contingent liability, goodwill may be overstated at the acquisition point. To calculate the exact goodwill, we need to consider available contingent liabilities. We have to evaluate that and we have to record that in the rules contingent liability. At which point you are recognizing contingent liability at the business acquisition, the consolidation. Once you are calculating goodwill, you need to recognize contingent liability. Contingent liability. Right. I hope that contingent liability is clear. Again, grade 2 learning if you want, whether we can do there. And the point of acquisition is legal cost. Market level cash credit, cost of control account and also credit. Because it's not part of the later. Normally, we cannot make the actual case next level. We are not recognizing contingent liability. Why? There's a doubt about the future gain. Uncertain liability. Right? So then, we are just disclosing. But at the point of acquisition, consolidation point, we need to recognize it as part of goodwill. For the reason, at the point of acquisition, we calculate the goodwill. The point of acquisition, we calculate the goodwill. Goodwill is invisible. You don't have physical substance, I don't have power. We calculate that amount and we are getting to the books. At the point of calculating that amount, we have some kind of a commitment to answer event, a kind of contingent liability. We need to deduct it to get the exact rate. That's the logic behind that. You know that internally generated goodwill can't be recognized as the case. Generated goodwill. Why? At the point of acquisition, we are recognizing the goodwill. It is so. As the case 37, we can't recognize contingent liability, but at the point of acquisition, once you are calculating, after long time, right? Yes, are the hour lectures. Yes, are the hour that corporate reporting now in our yes, are the lecture at that is equal to the corporate reporting Misunawagi. Is equal to degree Misunawagi. Right? That level of importance is there. Right? Equal to you is the corporate reporting, you is the degree. That level of importance was there last. To catch that, that's okay. Now, can I get any more here? You know, let's get that out of our satu. Mungkin doa, kalau ada challenge dengan kawan, itu kita reaction. But my ultimate objective is you should know what we are discussing here, what's the accounting entries, because you are, marketing your degree, this is inbuilt. If you don't know about this, ultimately that will impact to SAP. Ultimately that will, come into the lecturer's profile. Who are the lecturers there? Are they competent enough to give that knowledge? That's not good, right? So then you are the ambassadors, like kind of a output from SAP. So then the quality outcome always giving kind of a real value to the society. That's the ultimate objective, right? So then today we discuss two things. We can practice that in the exam and the practice question, contingent liability, right? Not a big deal. You may receive a kind of a sentence about contingent liability. What you have to do is you have to record it. How you are going to record it? Liability account credit, debit to the cost of control account. Debit to cost of control account means goodwill again other account. Why? We are getting goodwill from this side. We are getting goodwill from this side. Debit here, credit here, debit to goodwill account. This side. If you are putting something to here, definitely it will impact to the goodwill. Right? Keep in mind, contingent liability and consultation fees. Two adjustments done. Or they come a payback here. Keep in mind. Right. We can move forward. Right. So we have here the rent. Q has rented a two-story building to P. Rent. Whatever the question you did here, we don't have much entries, right? We don't have much, adjustment. But in a question, these are the adjustments you may have. So then be ready. One by one, prepare for that. If you are missing one adjustment, talk to your friend and ask from them and get clarified. So then you can easily do the console question. In the exam, you will be receiving 35 marks. They cannot carry forward. If you do not cooperate, 35 marks. The console question, right? Okay, now we are discussing about intercompany rent. Intercompany rent. Intercompany rent. That rent may be short term or long term. Why we are dividing the short term or long term? It is long term rent. It is a long term rent. That company may be recorded the ROU, right of use asset. ROUA. This is just the rent income. Rent expense or income. Short term rent. So then we may have two scenarios. Parent company, subsidiary company. Parent having a building, parent can rent out to the subsidiary. Subsidiary having a building, subsidiary can rent out to the parent. So the scenario 1, this. Scenario 2, this. That may be short-term rent, that may be long-term rent. If it is a long-term rent, more than 1 year, normally we consider, right? Both company, whatever the company, getting that as a rent. can recognize the right of use asset. Right of use asset. And other company is the rent income. Rent income. If it is a short-term rent, one company rent income, other company rent expense. ROUA. Do you know that? ROUA can is the right of use asset. Right of use asset. Do you know about that? This. This can be operating this. Operating this long term. ROUA can handle right of use asset. Right of use asset. You should know that right of use asset, right? Right of use asset, no. So then that's a new concept came in after FRS 16, right? FRS 16. But it says if you are getting a building, or you are the lessee, not lessor. Lessor, lessee. Lessor, lessee. You are the person who are getting the building, right? So then, there's a question. Can you recognize that as an asset? Previously, before FRS 16, what we did to get an asset for the renting purpose, we recognize the rent expense. This is the rent expense. While the second operating lease are done there, what's the treatment? Once you are paying your rent expense, rent expenses can be other treatment. Rent expenses are cash credit. Rent expenses after talking if you have taken a building for renting purpose for long-term renting purpose, like a branch, you need to recognize it as an asset anyway. What's the reason? What's the reason behind that? Right of use asset. What's the reason? You are taking, let's say, out of the apartment in Lanka. In your books, you can recognize assets. What's the logic behind that? On the asset, you have that control within that 5 years. Because you are having the control, you are not having the ownership, but you have the control. After taking for 5 years, you have a kind of asset. You have control over asset. You can take that asset, you can drive that asset to earn benefits to your organization. That's the reason we are recognizing ROUA. To recognize ROUA, what's the reason? Within that short time period, we are controlling that asset. Controlling power is the basis for recognizing ROUA. Previously, whatever the period, maybe 5 years, 6 years, අපි මොකද කරේ? Rent, cash credit, rent expense, debit කරා. නේද? Operating lease නම් මේක තමයි කරේ. හැබැයි with SLFRS 16, we change our accounting treatment. For 5 years, for 5 years, we have a rent expense. For this, within this 5 years, this particular asset will be controlled by the company. මොකද අපිට 5 year agreement එකක් තියෙනවා. ඒකට 5 year ඇතුලේ කවුරු හරි ඇවිල්ලා කියනවාද මේ බිල්ඩින් එකේ වා මෙහෙම කරන්න නැහැ. මේ බිල්ඩින් එකේ පේන්ට් කරන විදිය, whatever the interior designing and fittings, all the things will be controlled by the company. If it is so, you have the control over the asset to earn benefit, future economic benefit. If it is so, it's asset. It's asset. But asset එකක් තියෙනවා. ඒක තමයි argument එක. Standard setters ලා argue කරේ. වා rent එක තරම් තියෙනවා නම් 5 years. වාගේ ඇයි books වල asset එකක්. නේද? හරි companies තියෙනවා. ලොකු companies. හැබැයි PPE zero. No PPN. මුකුත් asset එකක් නැහැ. ඉන්න dividend එකක් පේන්නත් නැහැ. හැබැයි ලොකු revenue එකක් නැහැ. So then financial statements giving kind of an unfair picture because as a company, they should have a kind of a long-term expectation. They should have kind of a long-term assets in the books to generate income. So then it's a kind of a going concern aspect. If you don't have this kind of a commitment, ROU asset, it's a concern because within short time that company may be එක නැති වෙලා යන්න පුළුවන් කියලා හිතෙනවා. It's a kind of a doubt about the company. Because of that, standard setter recommend to recognize the ROUA. Because within this period, control over the asset is the company. How we are going to calculate it? We know that future in like maybe for 1 year, maybe 300,000. You need to present value there. Today we need to recognize the ROUA. ROUA asset debit credit to lease liability. ROUA asset credit, what's the amount? This 300,000. We need to present value by using IBR. Incremental borrowing rate. By using IBR, we need to present value and we need to recognize that as a ROUA debit credit lease liability. Right? So then after 5 years, let's say after 1 year, what's the reflection? What's the entry you supposed to pass? ROU asset should be depreciated by using 5. So then we need to recognize depreciation. Depreciation expense debit, credit to accumulated depreciation. Right? This liability. What's the double entry? Once you are paying cash credit, this liability debit. Cash debit, this liability credit. Cash credit, liability debit. This liability, right? It's a credit account. Second year, but lease liability recognized after doing kind of a discount. Wow, lease liability recognized 300,000 into 5. 1.5 million. This liability recognized 1.5 million. Why? You discounted it by using IBR. So then this account consists with less than this. But you are paying 300,000 each and every month. The difference? This interest. May ROUA SLFR 16 දිනවල මම සම්පූර්ණයෙන් කියලා දෙන්න පුළුවන්. Now I assume that you know about SLFR 16. 16 දන්නවා කියලා තමයි assume කරන්නේ. Right? So then again we are having deferred tax impact as well here. Don't worry about that. But once you are doing consolidation, intercompany, if we have this kind of a scenario, you have taken parent asset, you have taken subsidiary asset, and we have recognized ROUA in our books, plus lease liability. Then what we are going to do? That's the question. Here simple. Expense line කරලා income line කරලා තියෙන්නේ. මේක නිසා හිතන්නකෝ intercompany rent. Because of that, let's say we are having first one intercompany receivable payable, rent payable, rent receivable. Same entry, receivable should be set off with the table. Income and expense should be set off by income and expense should be set off by as a one entity. Once you are going to do the consolidation, we think about one entity. As a one entity, we don't have any trade income and expense. Right pocket to left pocket. There are rate and reason one is a common. You know what income is done. Company is not the console controller. वहाँ मान लीजिए जब रेट एक्सपेंस के एक्सपेंस का कितने जाते हैं वो ध्यान किधर आते हैं वन concept. So then we don't have any expense or income because it was earned from your brothers. Right? You are in a company. If you are doing kind of expense to subsidiary, so the expense under consolidation. There's no transaction. There's a transaction inside the company. There's book. There's no impact, right? Instead of very rate expense and income, let it go. Then if you recognize ROUA, what you are going to do? What you are going to do? एक कंपनी ROUA recognize करेगा उदाहरण को parent company parent company के subsidiary को दिया था बिल्डिंग ने का parent has recognized ROUA plus lease liability. ROUA plus lease liability. So parent को दिया था sorry. Parent deal with subsidiary, right? ROUA lease liability how they recognize the subsidiary for 5 years. So what me ask books are the parent book. That's it. What does it? Investor property is not there. Renting purpose ने use कर लेते हैं. मैं आगे individual books कर लेती ना IP भी दे. IP भी दे ना मैं पैसे दिया ना. मैं पैसे ROUA के लिए दे ना. Then मैं देखकर मैं ऊपर दे देना दे देने को नौ नंबर वाले. बस ये. नहीं कब दे दे काउंट करा. वाले मैंने करा मत है बड़े. कंसोल करा तो. वाल गाँव दे ना. ये बड़े दिदान. अरे ये में तो वन है में तो पर तेरे रहो. Harry, Harry ने वही कहना था, वाह, कैंपस से कहा बॉडी मार्कर, और हम के, ये ना, आपका के, अरे मालिक के, जान के, अरे, ये आओ मेरे कर, तो बॉडी में साले देने के एक बात से, साले ना दे रहा नहीं, देना ये जरूर, इनकम को एक पैसे को नहीं मांगे, मिला तेरे ना नहीं, ये वाली क्या है, कंट्रोल क्या, parent subsidiary considered as one entity. As a one entity. So then, once you are doing your consolidation, you have to think like one entity. So then, you don't have any IP. Why? You have not rented out. So then, this IP classification should be PP&E. Should be classified under PP&E. So the current IP very marble, PP is an asset classification. There's no much impact. But that may be complicated if you have two different accounting treatment for IP and PP&E. Are you getting me? Some companies IP evaluation model, PP&E cost model. If you are using same treatment for consolidation, you are transferring IP to PP&E, you need to revalue. You need to do that change according to your policy, right? That depends on your policy, right? And then you need to transfer it to the PP&E. That is fixed. The entry will be changed according to the accounting policy you are using for PP to IP. If you are using same way, we are using cost model for IP to PP&E. Same method. No issue. Just a matter of transferring. If you are using revaluation model to PP&E IP cost model, once you are transferring cost to IP, you have to do revaluation. Okay. So then ROUA asset and the liability should be netted off. You have to reverse that. In the book of B, you can't recognize ROUA or this liability because as a one entity, there's no such a liability. There's no such an asset. Why? We have already recognized asset as PP&E. Then asset को कर देंगे हम ना overstatement. You have to reverse ROUA and this liability. Keep in mind if you have a question like that. So then two scenarios. If examiner interests to test intercompany rent, he may have two scenarios. Maybe short-term rent or long-term rent. In long-term rent, you may test the ROUA. Right? You do kind of a question, but it's a matter of understanding things. That's important. Okay. I hope that all the things we discussed here, all the things discussed last week, I think intercompany, this sales and purchases, intercompany revenue need to be discussed again. But I don't know clear වුනේ නැහැ කියලා. එහෙම නම් ආයෙත් කියලා දෙන්න. ආයෙත් කියලා දෙනවා. That's a very common entry, right? Intercompany sales. Intercompany एक आप क्या ले? Intercompany PPE sales, PPE or IP sales, intercompany transfers. This is again a common entry, common adjustment. But the adjustment parent selling some PP&E subsidy as a kind of a taking a gain. So the parent subsidy දෙකට PP එකක් තිබුණා. What's the accounting? For subsidy selling one asset to parent. The accounting thing. So then one subsidy is selling asset to parent, there may be a disposal gain or loss. What we are doing as parent, gain or loss. As a one entity, there's no transaction. Okay, then I will post it. Are there any WhatsApp? I will take it. Right. So then parent selling an asset to subsidiary company. Because හරියට බලන්න කරන්න. Because complex කරන්න පුළුවන් area එක. So then what you have to do? To know that once you are selling an asset once you are selling PP&E, you know that disposal, right? Disposal account. Disposal account, we are having the cost, we are having the accumulated depreciation, we are having cash, and then profitability, profit. At the disposal, parent or subsidiary may have a gain or loss. Gain or loss. I'm discussing in a group. Parent can sell one asset to subsidiary. At that point, individual company can recognize a gain or loss. It may be parent or subsidiary. Simple. So then, as I repeating myself, once you are doing consolidation, we think as P and S, not P individually, not S individually, right? Once you are thinking like this, consolidation concept, one entity concept, we don't have any transaction here, right? We have not sold it out. We don't want to recognize a gain. We don't do that. It's a matter of reversing this profit or gain. And then we have another thing, another adjustment. What is that? Because of this profit and loss, depreciation. So then, because of this profit or loss, other company, buying company, may done their depreciation based on the purchase value. Your depreciation may be period. Then depreciation also should be corrected. ඇයි එහෙම correct කරන්න ඕන කියන එක හොඳට තේරෙන්න ඕන. So then වගේ asset එකක් හොඳට අහගන්න. මේක අහගන්න නැහැ, තේරෙන්නේ නැහැ, මට කොන්සෝල් එපා කියන කටට තේරෙනවා මේක. අහගත්තොත්. Right? If you want to listen, it's very simple. You may have a motorbike for 100,000, right? 100,000 motorbike. Accumulated depreciation 20,000 is the cost. Accumulated depreciation. This parent company books. Parents planning to sell it to subsidiary company for 90,000 rupees. So then, basic disposal account, preschool knowledge, right? Disposal account in subsidiary books. Disposal account. Asset account credit, debit to 100,000. Motorbike account, debit 100,000. Accumulated depreciation debit, credit to here 20,000. Cash, we are getting cash 90,000. Cash debit, credit to here. If you are getting higher value, we have to add. We have to get the summation here. 110. 10,000 P&L profit. 10,000 debit here, credit to P&L. This is the disposal gain recognized under parents' books. This was the given recognized gain. So under this company, what's the double entry? What's the double entry? cash credit 90,000, motorbike debit 90,000. Subsidiary company. Subsidiary company, this is the entry. So then after purchasing, subsidiary company assume that economic useful lifetime or useful lifetime. Useful lifetime, not economic useful lifetime. Useful lifetime 5 years. Useful lifetime 5 years. Then depreciation debit 18,000. Yes. Accumulated depreciation 18,000. These are the two sides of individual companies, parent and the subsidiary. So once you are doing consolidation, we don't have two entities. It's a one entity. It's a one entity. We don't want to record this transaction. We have to reverse all the things. Because it's a one entity, there's no selling transaction. So then what you have to do? In this company, recorded gain should be reversed. Recorded gain should be reversed. ඔකට රෙකෝඩ් කරපු දැන් මාක් කරගන්න ඕන කොහමද මේවයි අයින් කරාම මොනවා අයින් කරන්නද මේ එන්ට්‍රීස් දාන්න නැත්නම් ඔයාලට තව විදියක් සජෙස්ට් කරන්න පුළුවන් දාපු එන්ට්‍රී සේරම රිවර්ස් කරගෙන යන්න කියලා කොහොමද එහෙම කරන්නේ you can't do that you can suggest that we put that the asset transfer entry reverse it credit this account so the once you are doing these consolidation, we don't have this as a disposal account, right? We can't see these things. We just see the other income, recognize P&L amount only. At that point, what we have to do? We have to reverse the impact only, right? We don't need to reverse all the entries we passed. Whatever the impact, we need to reverse. What's the impact we have? This is the impact we need to reverse. One impact. You can identify this is one impact we need to reverse. Here we have one impact. What is that? What's here we have impact? Not here. Here we have impact. Here we have impact. This should be 80,000. We have a 10,000 impact, right? Again, here we have impact. These numbers should be adjusted. Now, what we are make it impact එකක් තියෙනවා. Make it impact එකක් තියෙනවා. Now, ඒක impact එකක් නැහැ. Why? One entity cash. One side cash credit, one side cash debit. No impact. Here what happened? Asset credit 100,000, debit here 90,000. Right? So then that should be corrected. What we have to do? We have to reverse this gain. Once you are reversing the gain account. Disposal gain account. Disposal gain account credit. We had credit balance, right? This 10,000 credit here. Now what are debit here, credit to Debit here, credit to this account. Debit here, credit to asset account, subsidiary asset account. Why? At the point of disposing, what's the asset value? 100,000 minus 20,000. Net book value 80,000, right? 80,000. Parent company net book value 80,000. How did they record it? 90,000. As a one entity, there's no value increase. වැඩිපුර හම්බෙච්ච සල්ලි ටික තමයි gain එක විදිහට recognize කරේ. We need to reverse that. Gain account debit, gain account debit credit to asset account. Gain එකයි asset over value එකයි අයින් කරන්න ඕනේ. Right? Gain account debit, asset account credit, net book value. Right? And then they depreciated by using 90. They supposed to depreciate by using 80. There was no transaction. If it is so, this company normally depreciate by using 80,000. So then we need to consider the 80,000 for depreciation. 80,000 for depreciation. So then 80,000 divided by 5. 16,000. The difference should be reversed. Difference is done. Difference, depreciation account credit, debit to accumulated depreciation account, right? If you have recorded as a net book value, you have to record that to the asset account value, asset account. If you have separated accumulated depreciation account, you have to adjust to that. Otherwise, you need to adjust to this account. Make a තේරුණාද නැද්ද? Intercompany asset disposal. So then, can you do this question number 3? Question number 3. B company has sold motor truck to Q company as of July 1st, 2022. As of July 1st, 2022, the cost of the motor truck was 8.5 million and the accumulated depreciation 5 million. The selling price was 4 million. Can you all do this? And write down the consolidated entries. Consolidated exam type question එක. ඒක තව තියෙන point එකක් කියලා දෙන්න තමයි යන්නේ. How is the company? gain or loss, right? And because of that gain or loss, other company report that asset with a different value. That value should be same with the previous value we had. Parent company recognize gain as a obviously. Other company can recognize the gain adu value. And gain loss එක අපිට decide කරන්න. gain එකක් නම් value එකක්. So that is unreal. Whether 80,000 value is equals value. 100,000 20,000 and value 80,000. 80,000 they are depreciated 90,000. And then 1% the 150. You don't have to overstate that. We have to consider that 8,000. So then we need to reverse the equation of gain or loss and then depreciation. Keep in mind, two leads we need to do. I have given a question number 3. So then we have to mention the also have a balance දෙක හදලා තමයි අපි final follow කරන්නේ. يعني different so then once you are doing the consolidation you are doing line by line consolidation. Right. ये line දෙක add කරන අතරේ තව column එකක් adjustment. ये adjustment එක දාලා තමයි final column එක ගන්න. Between two entities we can reverse that. Why? Within the group, we don't have any intercompany gain. We don't want to depreciate more or less. Right? Right. they have not given this depreciation rate, no? So then, if you have depreciation rate, let's say 10%. Let's say depreciation rate is 10%. What's the depreciation value in US? Tell me that if there is a depreciation rate 10%, what's the depreciation value in reverse? Here the depreciation value of the reverse there. What's the depreciation value we need to reverse? 10%. So then be careful. The asset was purchased at the mid of the year. Only 6 months we need to reverse. Keep in mind. That is the only point we need to get from here. So then we have 0.5. 0.5 is the additional gain that is behind. So then normally this term and normally they have 10% depreciation. Normally 10% depreciation. Because of this gain, they are additionally depreciating that much. Are you getting? So that's the reverse element. We don't need to reverse all depreciation amount. What we are going to reverse is because of gain or loss. What is the amount? Oh, under depreciation for the period. Period is 6 months. That's the key point, right? Every day I can give a 6-month period. Because it is done for 6 months, not for 1 year. That is the 4.3 credits. You are one of happening. You are focusing about the dates. That's really important. Is that a mark up once you are having BP and E, intercompany transfer, once you are reversing your depreciation, please consider the date you dispose. The date you dispose will impact to the depreciation, right? But it is not impact to the gain. It is not impact to the gain. There is another we are learning the fourth entry. First one consolidation, second one financial liability, Third one, rent. Fourth one, intercompany PP transfer. And maybe other thing, at least we have other right? There may be four types of adjustment. Those are the main adjustments. One by one, my friend. Okay, I hope that is clear. Okay, sir? Right. There matter, I will repeat myself again and again. There 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 Right. So then you may have different scenarios under this. So the 1 year period depreciation, half year period depreciation, or there may be you know, some adjustment may be recorded differently, right? So then this question can be modified like this. These are the information, but erroneously subsidiary company has recorded this asset for uh, for 12 million. So for 12 million, erroneously they have recorded that asset as a 12 million. So need to correct that as well. Right? Because of that, they have depreciated additionally. That also should be corrected. So then, or else examiner can tell intercompany sales was there, but both companies has not recorded this transaction. එහෙම transaction එකක් වෙලා තියෙනවා. company දෙකම record කරලා නැහැ. මොකද adjustment එකක් ගන්න ඕනේ නැහැ. ඒක දාන්න ඕනේ. They have not recorded. So this side they have not recorded the gain or loss. Other side they have not recorded the gain or asset. They have recorded asset means they have not done the depreciation. If it is so, we don't need to do any adjustment. Right? These are the scenarios and they can change the question. Then one may someone own exam maker. Whatever the exam, ACCA, CIMA, whatever the accounting exam, if you have type of a console question, this type of question can be repeated. Intercompany transfer of assets. So then you can try this now. You have to focus about the gain and the accounting treatment, accounting depreciation treatment. Those things should be reversed based on the question. Okay, right. Now I am going back to intercompany sales. මම දැන් ඒක ආයෙත් කියලා දෙන්න යනවා. ඒ සතියේ මොකද? අර ගොඩාක් ෆැක්ට් වෙලානේ කියලා දුන්නේ නේද? මුල අවුල් වුණා වගේ මට හිතුණා. ඒ කියන්නේ if you have intercompany PPE transfers, you need to focus two things. What are they? Gain or loss? Loss and depreciation. Right? If you have a land transfer, what depreciation area කරනවද? නෑ. Land depreciation ගන්න නැති නිසා. If you are selling a land, your cost and the selling price may be there may be a gap, maybe a loss or gain. At that point, you have to do only gain or loss reversal. Don't care about the depreciation. Why? According to Article 16, we are not going to depreciate land. Right? Okay. So then, if we have such kind of asset transfer in between subsidiary and the parent, you need to focus two areas, 1 and 2. Likewise, if you are selling your main outcome, intercompany sales, you need to focus 1 and 2. What is that? First one, sales and cost of sales entry. Second one, unrealized gain. Unrealized gain. If you have intercompany sales, you can මොකක්ද? parent subsidiary equivalent, subsidiary parent equivalent. If you have intercompany sales, you need to focus two things. First one, intercompany sales versus cost of sales. What do you mean by that? Here we don't have any impact. No impact to the profitability. No impact to the profit. Just a matter of classification. මේවා ගේ සතියේ ලියාගත්තා. ගේ සතියේ ලියාගත්ත කට්ටිය ලියා ගන්න ඕනේ. A company and the B company. A company has purchased. A company has purchased. A company has purchased 100 worth of item from this person. 100 worth of item. So then his cost of sale 100. Why? Once they are purchasing this, what's the double entry? Cash credit, purchase account debit. Purchase account is part of cost of sales. So then what he is doing is, what A is doing is, A is planning to do, sell it to B. Once he is selling, he is putting 20% profit margin. He is selling it to 120. 120. Right? So then A sales 120. Are you okay? So then gross margin 20. A की gross margin लेकर 20. They purchase to 100, selling to 120 to B, intercompany, subsidiary company, right? So then B purchase. Once B purchasing, it's in his cost of sale. How much? 120. B selling that to this customer to 200. How much B gross profit? 80. B selling this to him for 200. This is kind of a very basic scenario, right? Individual books, A recorded 20 gross margin, B recorded 80 gross margin. Altogether, how much is the gross margin? 100 gross margin. 100 gross margin आपको विधि दवाई में 20 plus 80. 20 plus 80. 100 is how विधि आपको? 100 is how विधि आपको? Purchase outside purchase 100, sell it to 100. 200 minus 100, 100, right? 200 minus 100, 100. Then आपको लगा दे. Agora dele é meio science. So then here we are planning to account this transaction as a one entity. That is the concept, right? Once we are doing consolidation. So then here we are planning to do AB consolidation. AB consolidation. AB consolidation, what we are going to do, we are planning to do line by line consolidation, right? So then A plus B. A plus B. So then see A plus B 320. 320. Here A plus B 220. Gross margin 100. Gross margin 100. If you are doing very basic way. But once you are doing your accounting, always we are discussing about we need to do kind of a correct classification. We don't need to focus about the ultimate impact. Impact may be 0, but the correct classification is a must. Right? Here we are having very incorrect classification. There's an overstatement. Here we have overstatement as a one entity. Here we also have overstatement. As a one entity, what's the overstatement? As a one entity, how much your sales? How much your sales? Not, you can't add this sales to this sales and you can't get this one. This is correct, incorrect. What you have to do? You have to reverse. You have to reverse intercompany sales. As a one entity, you purchase from 100 to sold it out to 200. That's it. That should be reflected under. That is the reflection ultimately. Now we consider that as a one entity. One entity. So then this is AB1 entity. To AB1 entity, if you are preparing the income statement, how much is the cost? 100, sales 200. Cost is 100, sales is 200. It is so. We need to eliminate two things. You can see you have to eliminate this sales and this cost of sale. You have to eliminate these two. It means you have to deduct 120 from here, deduct 120 from here, equal 200 minus 100, again 100, again 100, right? This is the final reflection. There's no impact, but we have cleared this. Intercompany sales should be eliminated from sales and the cost of sales, same amount. So ultimate impact is same, right? So then because of this, මෙහෙම කරත් 100, මෙහෙම කරත් 100. Because of this, since if you are doing the balance sheet, no need to do any entry, no need to pass entry, no need to consider this entry, right? No need to pass entry. But if you have unrealized gain, that should be adjusted. If you have unrealized gain, that should be adjusted. That should be adjusted. All the people in the audience should know what this is. As a one entity, we purchase from 100, we sold it out to 200. That should be reflected in the console. That is called console, right? One entity. You can't say 320. 320, 120 intercompany. Intercompany no impact. So what do you mean by this? Sales, cost of sales, elimination, unrealized gain. If you have an unrealized gain, that should be adjusted. Unrealized gain means here, whatever the purchase amount, all the things we sold it out to the customer. Right? Sometimes A company selling to B company keeping. They are not selling the whole amount. They are keeping that amount as an inventory item. If it is so, under inventory, there may be intercompany purchase items. Intercompany purchase items. Right? Once you are getting B company inventory, if they are not selling the whole item purchased from the subsidiary parent company, that keeps as a inventory, right? That keeps as inventory. How about the inventory amount, price? So the inventory price. මෙයාගේ purchase කරපු cost එකට, purchase කරපු amount එකට. එහෙනම් මෙයාගේ selling price එකට තියෙන මෙයාගේ inventory. So then A company has recorded a gain under this for that inventory. Are you okay? You getting me? I'm A company selling to B company. B company keeping some item in their inventory now. If it is so, A company already recorded a gain for that. As a one entity, we don't have a gain for that. The remaining inventory item, unrealized gain portion. We can recognize that if we have already sold to outside the 100%. We have not sold. We are keeping like half 50% under inventory. If it is so, this 20, we have recognized only 10. Other 10 unrealized gain. Unrealized gain. So then inventory balance with the subsidiary company. That inventory balance has a 150, it is overstated. Right? It is overstated. Inventory overstated. Inventory should be inventory. We sold. Same example, right? Same example. 120 sold. 120 sold. They are keeping that 120 as cost of sales, and they are keeping 60 items in the inventory. 60 items in inventory. So then as a one entity, what you have to do? You have to reverse the recognized gain here, unrealized gain here, and we have to correct the overstatement of the inventory. Overstatement of the inventory versus unrealized gain. What's the entry? Unrealized gain debit, inventory account credit. Right? Unrealized gain debit, inventory account credit for the unrealized portion. That should be, that's a very tricky point you need to understand. It's a very common entry. So the whatever the P&L or balance sheet, that should be adjusted. Right? Unrealized gain. Parent to subsidiary, subsidiary to parent. Right? Parent to subsidiary. What's the entry? What's the entry? Parent sold to subsidiary. Parent sold to subsidiary. If you have only balance sheet, you don't want to do cost of sales adjustment. You need to adjust only the unrealized gain. Unrealized gain, consolidated earnings debit, subsidiary inventory credit. Right? If subsidiary is sold to parent, if you have only the balance sheet, subsidiary return earning credit, parent inventory, debit, credit. Subsidiary return earnings debit, parent inventory credit. Parent inventory, subsidiary inventory, no impact. Only to the inventory column. Inventory වගේ එකක් කොහොමද අපි line by line console කරන්නේ? Parent, subsidiary, inventory. Here 60,000, 50,000. We are putting adjustment to here. No impact. We have added to the inventory balance. Whatever the parent or subsidiary. The profit portion, subsidiary return earnings. Why we are doing subsidiary return earnings? Finally, what we are going to do? We are splitting to NCI and the parent. ඕනනම් ඔයාලට මෙහෙම කියන්න පුළුවන්. නේද? එහෙම දාන්න එපා සර් කියලා කිව්වා. subsidy return earnings debit කරන්න නැතුව දැම්මම දෙකට කඩලා NCI debit consolidated return earnings debit කරන්න පුළුවන් based on the stake. Right? ඒක ඔයාලට තේරෙන්න ඕන. That's up to you to decide. I hope you are clear. Intercompany sales is a very common entry. That's why I am telling you. Intercompany sales. Right. Okay. Right. So then here we have common adjustments. We have already completed all the things here. Right. So then 80% of the adjustment in your console question we covered here. 80%. So once I'm doing the paper, there may be some other creative adjustments as well. Right? You need to solve it out. Same logic. So the area may be one other area. I have not included here. Goodwill impairment. Goodwill impairment. So the goodwill generated from business combination, that is the asset need to do kind of impairment test annually. Without having any impairment implication, we have to do annual impairment test for goodwill generated from business combination, right? That's as per LKS 36 impairment standard, right? Accordingly, examiner can give you the impairment test result. Impairment test result. How can he give that? So then, already you have done the calculation and you have calculated the impairment. Impairment, sorry, goodwill. Goodwill was calculated to the acquisition date. Examiner can give as at the year end, 31st December 2024. Management has done a impairment test of the calculated goodwill. The book value, the calculated, the value of the goodwill is 85,000. 85,000 means whatever the calculated goodwill, let's say 150,000, should be reduced to this. Examine practice කළා තියෙන මේ විදිහට දෙන්න. What's the reason? ඇයි ඔයා goodwill එක වරද්දනවද? නේද? goodwill එක වැරද්දුවම අනිවාර්යයෙන් මේකත් වරද්දනවා. impairment එක අපි ගාණක් දුන්නොත් හරි. impairment මෙතෙන්ට අඩු වෙලා කියනවා. value. හැබැයි ගොඩාක්ම turn around වැරද්දක් කරලා goodwill එකෙන් ඕන එක ඔයාට ඇවිල්ලා තියෙන අනිත් පැත්තට gain on bargain purchase. ඇවිල්ලා තියෙන්නේ. එහෙමනම් goodwill එක මේක කරලා කිව්වම goodwill reverse කරන්න බෑ. I'm getting the as examiner, my correct goodwill is 150. My correct goodwill, expected goodwill is 150. So then, after having all those adjustments, the final adjustment, when the method is the adjustment again. According to impairment evaluation of the goodwill, management decided to reduce the goodwill amount to 85,000. So then what we have to do is, we have to recognize that impairment loss in between identified goodwill and the new book value. So then your balance sheet should reflect this value as the goodwill. The balance should be write off to your consolidated earnings account, right? Consolidated earnings account. So then you need to decide whether consolidated earnings or not. That's a very important thing. How you are going to decide? You can put a note. You can put a note. Impairment of goodwill. Impairment of goodwill. Impairment of goodwill. First one, if it is full goodwill, goodwill account credit, debit to console retained earnings, and proportionate goodwill. Impairment of goodwill. Impairment of goodwill. Goodwill generated from business combination. Definitely, management should be responsible to evaluate for goodwill impairment, right, annually. So then, impairment test. According to the impairment test, if you are doing full goodwill method, goodwill account credit, subsidiary retained earnings, debit. Proportionate goodwill, goodwill account credit, consolidated earnings. What's the reason? What's the reason? What do you mean by full goodwill and the proportionate goodwill? Right? Full goodwill and the proportionate goodwill. Here we have a goodwill. What is this? Is this full goodwill or proportionate goodwill? Full goodwill or proportionate goodwill? We can't say that, right? Based on this, we have to say whether it's full goodwill or proportionate goodwill. Have you taken NCI fair value? Have you taken NCI fair value? If it is so, we are getting the full goodwill. Goodwill for both NCI and if you are getting the book value of NCI to here, we are calculating proportionate goodwill. Proportionate goodwill means only goodwill relating to the parent company. Why? What's the reason? Once you are getting your fair value of NCI, whatever the NCI portion having the outsiders, book value may be the value in the books, but it can be sold it out for this value. It means the 10% of minority NCI value this much, Other portion, for other portion, 90% we are giving this much fair value. This is the overall fair value we are giving to the entity for this much of equity. Overall fair value. My contribution is the NCI contribution. Both are in fair value. Overall fair value versus net assets. We are getting full goodwill. Full goodwill. So then, if you are doing impairment for full goodwill, if you are doing impairment for full goodwill, that should be impacted to both NCI and shareholders, parent, right? Because of that, we are putting that impairment also to subsidiary return earnings. Otherwise, what you can do, you can proportionally put the NCI and the consolidated earnings, right? The full goodwill relating to both parties. Because of that, we are putting into subsidiary return earning account. Subsidiary return earning account, ultimately what we are going to do, we have to split to two parts and put into NCI and consolidated earnings, right? And proportionate goodwill, you know that it's considered parents part only. So then, whatever impairment only impact to the parent only, not NCI. If it is so, straight away you can put it to the consolidated earnings. Proportionate goodwill account credit debit to consolidated earnings. Why you are not putting to the subsidiary return earnings account? It's not relevant to NCI. Simple logic. That's about impairment of goodwill. You may have this type of a question, right? These are the areas can be tested. At the acquisition consolidation fee, at the acquisition contingent liability, impairment of goodwill, intercompany sales, intercompany PP transfer, intercompany payable receivables, intercompany borrowings, right? So those are the common things. If you can comfortable with each and every element adjustment, consolidation is the area you are very comfortable. Don't worry, right? Areas can මේවට තමයි නිකන් බය වෙන්නේ. Subsidy return earnings consolidated earnings. මට පාඩම් කරන්නේ මේක subsidy return earnings. එනකොටම අමතක වෙලා subsidy return earnings consolidated. logic එක අරගෙන නැහැ. full goodwill ලියාගෙන එනවා full goodwill නම් මේකට දාන්න. මේකම දාන්න. It is so complicated. If you are memorizing this kind of a parent like so then we are very complex. What are coming to the consolidation? You can't do it. There are okay. Now we are moving to not to a question. Basically, we need to try to do kind of a P&L, right? So that I can give P&L plus balance sheet. So you need to know how you are going to approach. If you are having a P&L, what are the adjustments you need to do? How you can continue that into the balance sheet? That's a very tricky area. So the same entries, no difficult part, but we have kind of a calculation at the end. That should be selected. That should be done, right? So then shall we try a P&L? Now balance sheet, I think you are comfortable with the formats and the way you are doing, kind of a process. I know that you can do. Still I have doubt that whether you can do a P&L and P&L plus balance sheet. That's the next step. Balance sheet you are comfortable, entries you are comfortable. You should know now how can complete a P&L. Then after completing P&L, how can you go to the same question balance sheet? So that's the area. It's a kind of a mechanism, right? We'll try to We try to do that now. Console question set number 4. Question number 1. BSAA. How we are going to do a console BSAA? Kind of just matter of line by line consolidation. How we are going to adjust that and how we can complete it. Try to do that quickly. We have only 3 adjustments. Right. Can you do this behavior? Right? So then here we have two entries: intercompany sales plus intercompany dividends. Right? Only two entries: intercompany sales plus intercompany dividends. Intercompany sales, we know that if we have intercompany sales, we have two adjustments. If we are giving P&L, we need to reverse this intercompany sales 40. Where we learned that. Last we need to adjust the unrealized gain. Unrealized gain. Unrealized gain double entry. Inventory credit. Debit to cost of sales. Debit to cost of sales means plus cost of sales. Right? Plus cost of sales. But ultimately minus cost of sales 40 plus cost of sales 5. Here we impact the 35. 70 minus 35 minus 35. So the intercompany dividend, other company, this include full 75% dividend. The question clearly says 20 dividends, 75% stake, 15 should be reversed. Income debit, credit to dividend receivables of parent, right? Dividend receivables of parent should be debit. If you are giving balance sheet, keep in mind, here we don't want to give the balance sheet. So some other entries we already done. Here we can adjust. What are they? What are they? If you are doing this goodwill impairment, so then if you have a goodwill impairment, you need to put a one line here, goodwill impairment, no P individual companies. Straight away there is a value for goodwill impairment, right, to the P&L. Keep in mind, once you are having intercompany PPE transfers, the gain, whatever the gain or loss, gain, if it is a gain, other income, loss or admin expense, parent or subsidiary, that gain or loss should be adjusted here, and depreciation also should be adjusted here. Or intercompany interest expense, intercompany interest income should be adjusted here. Intercompany rent income and expense should be adjusted here. Adjusted here for the current period, keep in mind, for the current period, just a matter of presentation. Whatever the things you did for consolidated return earnings and subsidiary return earnings for post-acquisition period should be adjusted to the P&L. Right? And then what we are going to do? Here we have the profit after consolidated profit after tax. You can say that consolidated profit after tax. So then now we are going to do the complex task in this. What is that? We need to separate this profit to NCI and the parent company. So what we are going to do? How we are going to do that? So then can we do like this? This question 75% parent, 25% subsidiary. Can we split like that? Profit. Yeah, profit. We can. So simple, 75% consolidated credit, 25%, 25% is also profit, 25% ACI credit. Can we do that? Can't do, no? Don't know the reason. Can't do. Why? This is console profit. This is console profit. You know that here we have the parent company. Parent company total profit attributed to parent company. Only subsidiary company profit should be split. So then what you have to do? You should know subsidiary profit separately. So then that's the critical part. Calculate your subsidiary profit again. Here we can easily do, right? So then once you are doing a P&L, please keep a note that your subsidiary profit should be calculated separately for this split, right? Otherwise, it's really difficult to get this adjustment. What's the subsidiary? What's the parent? Right? Here we have three adjustments. What are they? This adjustment first, this adjustment second, this adjustment third. This adjustment no impact. No impact. That was done to the console, right? Unrealized profit with whom? Unrealized profit with subsidiary. Here subsidiary sold to parent. B sold to parent. So then B sold. B sold means profit recorded by B. Unrealized profit with the B. So then that should be adjusted to here. How about this? This entry for parent company, right? Not subsidiary. So then what you can do, you can easily get here 70, right? $65. 65. Right? This is the B company adjusted profit. B company adjusted profit. From B company adjusted profit, how much is the 25%? How much is the 25%? 16.25. 16.25. 16.25 for NCI. So then, do we need to calculate again 75%? No need to calculate, right? We know from this 16.25 is the NCI portion. So then you can clearly say that profit attributable to NCI 16.25. 16.25 profit attributable to parent. How much? $88.75, right? So then what's the double entry? What's the double entry then? We have a profit here, debit here, credit to NCI. Debit here, credit to consolidated earnings. Consolidated earnings means the equity statement. If you want to do the equity statement, this should be the equity statement. So then, if you are having NCI account, this should be credited to NCI account 16.25 profit portion. Consolidated earnings credit 88.75. Right? Then the next step, what's the next step? How we are going to do a balance P&L plus the balance sheet. That's the next step. Now you are step by step, adjustment by adjustment, you are improving, right? You did the balance sheet. Our assignment is balance sheet. Your balance sheet. Those are balance sheet. Other P&L. Once you are doing P&L, what's the only critical thing? At the point of getting the profitability, we need to calculate subsidiary profit and get the portion and remove that and the remaining portion to the parent company. So therefore, from 105, my first question was, can we split to 25% and 75%? Why? Can't. Can't. Why? Full parent company profit relevant to the parent entity. Right? So then only subsidiary profit we can give to NCI and the parent. So then we should know what's the exact subsidiary profit after doing the console adjustment. What it means to you. What is the contribution to the console column from the subsidiary? That's the meaning. What's the contribution given by subsidiary to the consolidation? That should be calculated, get the NCI value. And after deducting from this NCI value, the remaining part is what? The parent. But its composition. Parent company individual profit 100% and subsidiary company remaining 75%. The ඒක අපිට වෙන විදිහට කැල් කරන්න පුළුවන් නැතිද? කොහොමද පුළුවන් නැත්තේ? දැන් මේ 88.75 ගන්න පුළුවන් ක්‍රමය මොකක්ද? මෙන්න මේ විදිහටම adjustment දාලා මේ column එක හදලා after completing this column, putting this adjustment, you have the parent profit. Add that amount to this 75%, you are getting 88.75. Okay. හොඳ අවධානයෙන් ඉන්න ඕන. නැත්නම් මේ ක්ලික් දෙන්න පුතේ. ඒ අන්තිමට කිව්ව මොකද්ද කියලා ටිකක් මතක තියාගන්න යාළුවෝ කියනවා නේද? දැන් අන්තිමට කිව්ව මොකක්ද? That's important. Putting that to NCI. So then you know that how we got this 16.1. Why we need to split? Normally once we are doing BSAA, the next step was we need to do the generated resource. That's a normal thing. If you are doing single account, after calculating the profit, you have to do the generated. The same way, we calculated the control profit. Which is 105, that's the answer. We need to split that into two parts here. One part is parent and the subsidiary. So then, parent company overall profit related to the parent company. Subsidiary only, we can split the 725. So that what we did was, we calculated that separately, identified subsidiary portion separately, and deducted from here. So then, P&L is also account, P account, right? P&L debit, P&L debit, credit to NCI. If you have a profit, P&L debit. After completing your P&L, is there any balance in the P&L? No. We have financed the balance sheet. We won't get that from the P&L. If we have a profit in the P&L debit, credit to NCI. P&L debit, credit to consolidated. That's it. Right? And may get a total process second. We can the process second you are finally learning the overall process. So then today I am sending a console. That's the first question I have given in the exam. I will share that past paper with you. This is the answer. Excel answer and the past paper. Right? What you can do is go through the answer, go through the question, understand the complexity, go through the Excel answer. One by one it is big. Right? So then get the experience and then I will give another question to practice. So then P&L plus balance sheet. Right? So then we are comfortable with that. So then we are remaining with three parts. What are they? Step acquisition, disposal and deferred. Step acquisition, disposal and deferred. Majority of the adjustment done, goodwill calculation done, P&L done, balance sheet done. But your experience should be improved and you need to know disposal, step acquisition and deferred tax. But I am not going to touch sub-subsidiaries. Right? There's another topic, sub-subsidiaries. How we are going to another consolidated account that is called sub-subsidiaries. Right? Take a correct tax. Sub-subsidiaries, if you want to do, you can ask questions. Right? Okay. So then for today, that's it. That's sharp on time, right? So then I hope your attendance for next week as well. We are having some The remaining parts, some few standards are there. The critical standard is 3.9. I don't complete it. Right? Okay, then that's for pay.